What's up, YouTube? So in this video we'll be going over how to trade futures with ICT concepts. In getting into that, I'm going to cut price back to 9 o'clock. Bro, like I always tell you guys, come to your chart at 9. Okay, 9 o'clock. And if you're an 8:30 trader, come at 8:15. But some general rules that I want to go over is between 9:30 to 10, you are most likely to get a low of the day if price is bullish. Sometimes it can be 9:30 to 10:30. Those are just general rules that I follow. And that's known as the opening range, the first 30 minutes. But when you come to your chart at 9, and I teach this in my Patreon, but right here at 9, the only thing you want to be looking for is what happened in the previous day on the 15-minute time frame and the day before that. Usually you don't need to go back 3 days. A lot of the work will be done in the previous day. All right, so I just stopped editing to make this clear on why I say come to your chart at 9 o'clock. If you believe price is an algorithm, then this is going to make sense to you. If you have not subscribed to price being an algorithm, just get off this channel because I'm not arguing with you. So this is the previous day. This is the current day. Okay. When I say come to your chart at 9 o'clock, that's because the 9:30 bell is at 9:30. Okay. And then 9:30 to 10, maybe 10:30. Those are factors. So when I say come at 9, it's because in the previous day, in the AM session or the PM session, there's gonna be a fair value gap that's wide open. Okay, it's gonna be wide open, and if it's not wide open, then it's gonna be like retraded to kind of. But 9 times out of 10, it's just a wide open fair value gap that's just right there in front of you, and they do that so the next day they have something to liquidate or go into. Like, it's just that simple. You can back test this part. You can go back every day at 9 o'clock and just look at the previous day, and you'll see just an open fair value gap either in the AM or PM. 9 times out of 10, it's going to be in the PM, only because of the MMXM factor that happens at 9:30. But you'll get it at the AM session too. But don't even pay attention to, the AM session fair value gap or the PM. Ignore it. I don't even notice, I don't pay attention to that. I just know there's a wide open fair value gap in the previous day or 3 days ago, and that's just the bottom line. So you want to spot a fair value gap in the previous day. That's why I say at 9 o'clock, they're going to set something up, and they do it every day. So every time that 9:30 bell opens or that PM session from 1:30 starts, just know that that is going to leave something for the next day. It's going to skip right past London and then back to the opening price. It's going to use those current levels in the other session, the previous day session, and it's going to use those. Or 3 days ago. People talk about session high and lows. Yeah, whatever. That's a factor, but I'm telling you what it's doing. So look, now we're in London session. London session will do whatever London session does. And when you come to your chart at 9, and we'll pretend this is 9, you want to start looking for the previous day fair value gap, and between midnight to 6 or 8, you'll know, but you can pick each day. It's given, give or take. But just know midnight to 6 or 8, there's going to be pools of liquidity. Either above or below. This is the first setup to framing your 9:30 open bias. If you have a pool on both sides, wait for 9:30 to open, then go the other way, then expect it to go this way, using that 9:30 volatility to get in there, and then you're gonna be left with 2 options. Is it gonna respect it, or is it going to trade through it, completing a MMXM? Every single day, right at 9:30, right at 8:30. You'll know by your economic calendar. I mean, do you have a high impact news driver at 8:30? Do you have a high impact news driver at 9:45? Do you have a high impact news driver just at 8:30 for the day? Because then you can start to see that 8:30 leg that will be just sharp in one side, and then you can expect 9:30 to continue the other way. There's so much ways you can maneuver through each day. You know, I teach this stuff in my Patreon. We're on a 50% discount, but every day at 9 o'clock, just come to your chart, mark out what you see, and we're going to go over some examples. So in Q1, I wasn't planning on this, but I can already tell some people are going to do it wrong. So we're going to go straight to the 15. Well, this is the example of today. I'm not going to go over that. I don't know what this stuff is. Actually, I'm bringing it back just to prove a point. Just to prove a point. Look at my levels, okay? Look at this time. 9:30 is right here. What do I have? Sell side, buy side. And hold on. I'm going to show you guys an algorithm. So here's midnight. Midnight to what? 6? Well, 8, 6 or 8, it's give or take. You come to your chart at 9 o'clock. You'll figure that out at 9 o'clock, whether you want to see liquidity or not. And I don't mark this stuff out. So here's 8 o'clock. Here's midnight. This range I use as liquidity when I come at 9 o'clock. So we have pool and another pool. So what did I say? Wait for the open. Boom. The open runs lower. Between 9:30 to 10, there's like a high or low of the day depending if the day's bullish or bearish. So price is down here. Why don't you look for a market maker buy model like this? Smart money reversal, original consolidation. You know, look at that previous fair value gap that I was talking about. Now they're usually not this small. I'm not even gonna lie to you. They're not this small. But the fact that it's right above liquidity, 9:30 went lower, it just makes sense. If you want precision on take profits, there it is. But the fair value gap is going to be like a sore thumb. It's just going to stand out just like this one. Just like this one. Always have this marked on your chart. Don't focus on it, but just always have it marked out. Yeah, here you go. Here's a perfect example. Now you have you have 2 entry models for this day. So sell side here. You can use 9:30 to short, taking profit down here, or you can wait for the opening range, look for the opening range gap to be higher because 9:30 went lower. You can trade up into that direction, trusting these levels. And it's just that simple. Come to your chart at 9. So here's 9 o'clock right here. 9 o'clock, come to your chart. So pretend you don't see all this stuff. And you're going to mark out everything I said. The previous fair value gap, the liquidity from midnight to 6 or midnight to 8, obviously the pool, and down here. And if you see liquidity on both sides, just wait for the open and then go the other way. It's just that simple. But on this current day, you just want to have a look at what's going on. And when you see obvious price runs like this, and I'm not going to say into sell side because you guys might not get that sell side beforehand. But when you see sharp runs to the downside in an uptrend, that's how you know that those levels are protected. So as price is going up, you can see there's like stabs that go down. And at the 9:30 open, there was one as well here. So general rule is in uptrends, you're going to see a lot of sharp moves to the downside, and that's to stop people out. But again, on the 15-minute time frame, you want to be looking for liquidity and inefficiency. So on the 15-minute time frame, you can see we have these 2 fair value gaps here. And on the higher time frame, there is a hourly SIBI that extends down to this high. I'm just going to show you guys that. So this is the hourly SIBI. Now the thing about picking hourly and 15-minute time frames is you're not sure if price is going to get there, but studying that 1 minute time frame and watching how price gets to fair value gaps on the 5 minute and 15 second, you'll start to see what I'm saying. but you don't know that this level is going to get hit for sure, but you're just speculating. And looking at the sharp move down, running up, you can see a fair value gap. Now, I don't really mark these small fair value gaps out in the current day, because I'm more looking at like liquidity on the 15 and sometimes an obvious fair value gap. But to catch this move up here, you can see that there's a 15-minute BISI here. So just already what we know of price action, you know, breaker, fair value gap, displacement above highs, this volume imbalance here, good to use as support. So you got these two bullish PD arrays that are turning into inversions, and then wait for that 930 open. You could see price dips down and then runs up aggressively here, making this a market structure shift. This is when you can start speculating to go higher. And if you don't want to trade at 1045, as you can see on the bottom, there's other models you can do. So if you know between 930 to 1030 there's a significant low of the day on a bullish day, if you know that much, then why don't you just short the left side of the curve, you know? So you could be a short seller when price is running up into this inefficiency here. So we'll cut price back when it looks like this. And I did take shorts today, and they are posted in the Discord below if you guys want to see those. They're in the futures tab. So I knew today was going higher. Well, I didn't really know. I had a gut feeling it was going higher. And what would have confirmed that price was getting up here is obviously what happened before 930. So 930 runs up, tags this, starts trading down into this fair value gap again, and this sell side here that I'm going to mark out. This might sound like a lot of work for you guys, but it's really not, I promise. All you have to do is come to your chart at 9 o'clock, just mark out the most fattest fair value gaps you see in the previous day. That's it. And then use your daily time frame to mark out like an old daily low, and I promise you those are the only levels you need. I'm telling you that right now. The 15-second time frame is very helpful also, using the 15-second and 15-minute. But we're going to study this price action from this high down to the sell side here, and we'll see how you can get entries. So from the 15, we'll drop down to the 1 minute. I'm going to get rid of this volume imbalance level, but what I want to point out is you can see price runs up and taps this high, breaks down, inversion fair value gap here. And this was a decent short right here. And this was after the open in the 950 to 1010 macro. Now, if you're obviously scared of taking a trade like this, then look for a 15-second to 5-second confirmation that you like to see. As you can see here, price taps that inversion. This is where you're going to be selling, putting your stop loss above this high. Or if you're dropping down to the 15-second, you're going to wait to see displacement. Price breaks down, consolidates, breaks down, fair value gap here. This is where we had some shorts. Price runs down to that sell side. And I'm telling you right now, the only way you're going to catch this trade is if you know what's going on in the higher time frames. Because like I told you guys, 9:30 to 10, sometimes a 10:30 puts in your low of the day. Like, I already understand that. I don't think you guys do, but that's what I go for every day. 9:30 to 10, put in the low of the day. But before I start expecting those things, I need to have higher time frame levels. So price runs up in there. So price runs up into there, sells off, hitting here. Now, what do you do at this moment where you start thinking like, oh, well, what if price wants to dip down to here? What if price wants to consolidate? Like, how do I know if price wants to go up here? You know, like, there's things that obviously I think of every day. You know, I don't like hard line of bias, but I favor one side more than the other. And what I will say is in a moment like this, where you're like, okay, is that a shift? You just wait. You honestly just wait until you get something clear. So as price is running up, one thing I'm going to give to you guys that I don't hear anyone talk about, and you're going to hear it here first, is on the left side of the curve. If this was the left side of the curve and you see old fair value gaps, right? Instead of looking at it like it's going to tap that and sell off, look at it as it's going to blow through that fair value gap with the same energy it had coming down. So looking at these two fair value gaps here, it displaced lower. Coming back into it, you should expect it to displace through that. So that's sort of how I treat fair value gaps. I don't really like to, and basically if I'm expecting price to blow through this, it's safe to long a fair value gap like this, is also what I'm saying. My bad to switch that up mid-sentence, but it just came to my mind. It's just how I see things, and it's better if you guys can see it live. But I'm expecting this fair value gap to blow through that one. Discount array being this order block. So that's how much heat I would be able to absorb. Stop loss obviously being beneath here. Take profits would be, well, it depends on how much contracts you go in. But if it was me, I'd take some off here, and leaving some running. And if you guys want to see my trades, again, they're in the Discord. So I can't talk about this stuff too much in hindsight. I've already took my trades. But I'm ignoring the higher time frame right now, and I'm strictly talking about price action and MMXM right in this example here. So there you go. Price displaces through this. Here's another fair value gap. Tracing down. Still respecting this. And at any moment, like, I'm expecting a displacement through this high. Like, I don't think this is going to hold. And the reason being is because of the framework that we have here. And just trusting that what I'm telling you is old fair value gaps will have displacement through them. So there goes that displacement right there. And this is how you know you're on side. So you might be the guy that wants to wait for this fair value gap to get traded into before you long. I'm the guy that is starting to spot, you know, there's fair value gaps over here and we usually blow through them. So let me try to find a discount array before we tap that. And the reason why I'm saying that is because if it taps this fair value gap here and you start buying, it's gonna have a retracement. But if you can find a discount array before we get to a fair value gap, it's going to go through it pretty smooth. So I guess premium to discount, and not a lot of people teach that. Even though there's videos on it, they're not teaching it. They don't know what they're teaching. So back to the 1 minute, because the 15 second was probably too much. But how do you know that that setup is going to occur? 930s here, 1030s here. We're hitting a bullish higher time frame PD array, and I have draws that are likely to go higher for obvious reasons, and you can rewind the video and check that out. For an MMXM standpoint, this would be your original consolidation up here. This would be your smart money reversal, and your distribution phase should kick in around here. Right? So when you're on a 15-second chart and you're trading down here and you're seeing this live, like right now, like this is what price is looking like, you should already understand this is a distribution phase and just trust discount arrays. So this order block for me is the last line. This fair value gap, I'd rather see 50% of that. And this is actually where I took a long. That inversion fair value gap was my long. Up into these levels, and I'm just now remembering because I actually remember this setup. But as far as the 15-second down here, I didn't catch this. I caught the ones over here. These ones I didn't catch. These ones I did catch. So before we blew through this fair value gap here, I bought down here, and then it ran up, and then obviously I hopped to the 1 minute and seen all this stuff. So yeah, if you want to learn how to trade the AM session, it's all right there. I'm giving you guys key pointers that actually work. So start with your 15-minute time frame, come at 9 o'clock, pick the right levels. Oh, how do I know I'm picking the right levels? Post your chart in post your chart in Discord. Okay, and if you have the same levels as me, you have the right levels. Like it just works like that. So post your 15-minute chart at 9 o'clock every day. Post them in the futures tab. If I put a check mark, that means you have the right levels. So once you have a check mark under your picture, right, that's when you can start using the 1 minute and 15 second, how you need to use them, and use time-based models. Because if you don't have the right levels on your chart, it's useless. A breaker is going to turn to an inversion breaker, and you're going to get your stop loss hit. Like, it's just that simple. So start with the 15-minute and 1 hour. Key levels. Looking at how price played out, it ran up, tapped this, and then retraced. One pointer I'm gonna give to you guys, and I don't think it's the shortcut. Okay, if you guys just want to get in here and gamble with an edge, this is what I would give to you guys. So using 15-minute inefficiencies, if you have the 15-second chart. So you have a 15-minute inefficiency here, they got traded to. You have a 15-minute inefficiency here that got traded to. So these two inefficiencies got traded to. You have a 15-minute inefficiency here that got traded through. So a trick I would give you guys, okay, and this is high probability stuff, and this is gonna line up with time anyway, so don't focus too much on it. But using the 15-second to